Warren Buffett, the chairman of Berkshire Hathaway, is considered to be the greatest stock market investor of all time. He has stood out as one of the 10 richest men in all the years for over a decade. He is also most widely followed value investor that ever was. Buffett is strong proponent of long-term investment. There is no way to predict what the market will do in the short term, he insists. If you think you can jump in and out or that you know the time to come in and out, I think you are making a mistake. In his 50th anniversary letter to shareholders, Warren Buffett summed up his opinion about investment. Anything can happen anytime in markets. And no advisor, economist, or TV commentator, and definitely not Charlie nor I, can tell you when chaos will occur. Market forecasters will fill your ear, but will never fill your wallet, he warned. Buffett says, I never attempt to make money on the stock market. I buy on the assumption that they could close the market the next day and not reopen it for 5 years. Forecasts about how the market will perform in the future are just that, mere forecasts, says he, and adds, it is important to take investment advice, not with a grain of salt, but rather a whole bucket. Timing the market and making investment decisions purely based on market forecasts is not a good strategy, he affirms. The essence of investing lies not in predicting the future, but in understanding the present. He believes that economic numbers are not the guide to guess market performance in the short term. This shortfall was due, in part, because investors repeatedly chose the wrong points to trade in and out of the market. Buffett believes that the most important quality for an investor is temperament, not intellect. A successful investor doesn't focus on being with or against the crowd. Price is what you pay, value is what you get. This famous Buffett quote strikes at the heart of the value investor approach and reveals the secret of how the old guru made his fortune. The Warren Buffett flagship Berkshire Hathaway's annual shareholders meeting is attended by more than 30,000 fans. Fondly called the Oracle of Omaha, people listen with rapt attention to every word that the old sage goes on to convey for hours on end. Instead of trying to predict the market, Buffett prefers to focus on identifying companies with good fundamentals that the market is undervaluing. Buy 20 selected stocks which you think has great fundamentals. Keep them under lock and key for 10 to 20 years. At the end of that time you'd be rich, even if just 4 or 5 of those turn out to be super performers, Omaha advised a student who asked for tip at a meeting of young graduates in a business school. The chairman and CEO of Berkshire Hathaway doesn't sell stocks using a stop-loss order because of its short-term focus. Warren Buffett has continued to share his knowledge and experience of over 70 years with investors. He made his first investment in 3 shares of City Service Preferred when he was only 11. A Buffett rule which has proved most successful is that he does not think as if he is buying a stock. He buys a whole bunch of those businesses that he believes would be worth much more 10 or 20 or 30 years from now. Focus on long-term intrinsic value, not short-term earnings. Stocks are safe for the long run and they are very unsafe for tomorrow, he told investors. Berkshire Hathaway's 3 times has gone down roughly 50% since I took over. Did it make me feel poor? No, not at all. I knew it was worth more over time. Some of the comments of the old sage about the market never ceases to amaze investors. Rule number 1, never lose money. Rule number 2, never forget rule number 1. A simple rule dictates my buying: be fearful when others are greedy, and be greedy when others are fearful. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Look for companies with competitive advantages that can be maintained, or economic moats. Never depend on a single income. We all sit in the shade of trees planted by others, so it is obligatory to plant a few trees ourselves. Risk comes from not knowing what you're doing. Never invest in a business you can't understand. Nobody buys a farm based on whether they think it's going to rain next year. It is only when the tide goes out that you discover who has been swimming naked. All that means is that the quality of investment that a person is putting money into does not show up in a bull market, but when the market is going downhill. Focus on long-term intrinsic value, not short-term investment, the man who made a fortune and gave all of in charity advises. Our favorite holding period is forever. And finally, the most important quality for an investor is temperament, not intellect.